Hey everyone! Attention all seniors and disability benefit recipients. We are just days away from 3 massive changes hitting in January 2026. And if you're watching this right now, this affects your money directly. We're talking about an increase in benefits, changes to your monthly check, and new eligibility criteria that could mean more money in your pocket. If you receive Social Security, SSI, SSDI, VA benefits, railroad retirement, or survivor and spousal benefits, you need to hear this. And here's the kicker. Millions of you are actually going to receive your January 2026 payment in December. Yes, you heard that right, December. But before we dive into all of that, I just need one small favor. It takes 2 seconds. Please hit that like button on this video. It helps us reach more people who need this information. All right, let's get into it. My name is Frank, and I've spent years breaking down government benefits and policy changes for families and individuals who are trying to navigate this confusing system. I read the actual Social Security Administration updates, I track congressional proposals, and I make it my mission to translate all that government speak into language that actually makes sense for your life. Here's what we're covering today. First, I'm starting with some genuinely good news. There's a proposal that could put an extra $1,200 in your pocket over the next 6 months, and I'll explain exactly what that means. Second, we're talking about your January 2026 payment schedule, including why millions are getting paid early in December. Third, I'm breaking down the 3 major changes taking effect in January: higher earning limits, higher maximum benefits, and new taxable earning caps. And finally, I'm giving you action steps and what to do if your payment doesn't show up when it's supposed to. Let me start with the good news because we all need some of that. There is a proposal on the table right now that could mean extra money on top of your regular COLA increase. I'm talking about $200 per month, and it could go as high as $200 fixed for millions of recipients. Here's what's happening. Senate Democrats have proposed a $200 monthly Social Security increase specifically to offset inflation. According to these Democratic senators, this $200 every single month is needed for all recipients: SSI, SSDI, Social Security retirement, VA, railroad retirement, and survivor and spousal beneficiaries. Everyone, and here's the important part, this $200 they're proposing would last for 6 months starting in January 2026. That means from January through June, you could be receiving an extra fixed $200 every single month. And listen to this. It doesn't matter how much you currently receive in benefits. This isn't tied to your monthly benefit amount. It's a flat $200 bonus. So even if you're only receiving $100 in benefits right now, you could start receiving $300 total if they approve this proposal. Now, I want to be clear, this is a proposal. It's not law yet, but it's being pushed hard. And as soon as we get more details about whether this passes, I'll update you immediately right here on this channel. Now let's talk about something that's definitely happening, your January 2026 payment schedule. And this is where it gets interesting because millions of recipients are going to receive their January benefits in December. Let me explain why. Wednesday, December 31st, 2025. SSI recipients are going to receive their January payment. Now, why are millions of SSI recipients getting their January payment in December? Simple answer, January 1st is a federal holiday. According to Social Security Administration rules and their calendar quirk, if your payment date falls on a holiday or weekend, you get paid early. So, SSI recipients, your January money hits on December 31st, Friday, January 2nd, 2026. This is for people who receive both Social Security and SSI benefits at the same time. If you're getting both programs, January 2nd is your payment date. Wednesday, January 14th. This is for Social Security recipients born between the 1st and 10th of any month. If your birthday falls in that range, mark January 14th on your calendar. Wednesday, January 21st. For those born between the 11th and 20th of any month, your payment arrives on the 21st. Wednesday, January 28th. For those born between the 21st and 31st of any month, that's your payment date. Now, I want to address something because we get this question in the comments all the time. People say, hey, you said my payment was coming today, but it's not in my bank account yet. Here's the thing. Your payment date is tied to your birthday. So make sure you're checking the right date based on when you were born. So, what do you do if your payment doesn't arrive on your scheduled date? Here's exactly what the Social Security Administration recommends. First, wait 3 business days. Sometimes there are processing delays, and they usually work themselves out within 3 days. Second, before you contact Social Security, call your bank or credit union. Ask them if there's any issue with your account. Sometimes accounts get frozen or there's a problem on the bank's end that's stopping the deposit. Third, if your bank gives you the green light and says everything is fine on their end, then you wait those 3 days and contact Social Security Administration. Tell them, I called my bank. They confirmed my account is active and ready to receive deposits. The delay seems to be on your end. They'll investigate, and if everything checks out, they'll send your payment. All right. Now, let's talk about the cost of living adjustment for 2026. And I'm going to be straight with you about this. Starting in 2026, Social Security recipients can expect a 2.8% cost of living adjustment. The average increase works out to about $56 per month. Now, before you get excited, let me give you some context. According to a recent report from Gallup, grocery prices are up 21% over the past 3 years. According to CBS, food prices have increased 18.2% in the past 3 years, and the increase millions of recipients are getting 2.8%. Does that seem fair to you? It doesn't to me either. And here's why this is happening. The COLA metric is outdated. It's vague. It needs to change. The current COLA calculation uses something called the CPIW, which stands for Consumer Price Index for workers. They're taking inflation data from American workers, spending habits, and applying it to seniors. But here's the problem. Seniors spend money differently than workers do. Seniors spend more on healthcare, prescription drugs, utilities, and housing. They're not spending money the same way a 35-year-old working person is. That's why analysts, experts, and lawmakers are pushing this administration and President Trump specifically to change the COLA metric from CPIW to CPIE, which is the Consumer Price Index for the elderly. What would this new metric do? It would actually analyze how seniors spend their money, how much they pay in rent or mortgage, how much they spend on utilities, food, and especially prescription medications. And then they'd calculate COLA based on that data. According to numerous analysts and experts, if they change to this CPIE metric, it would increase benefits somewhere between $300 to $500 per month for all Social Security, SSI, SSDI, survivor, spousal, VA, and railroad retirement beneficiaries. If you support changing to the CPIE metric, write in the comments, I support CPIE. Seriously, if you don't speak up, nothing will change. Your voice matters. Now let's get into the 3 huge changes taking effect in January 2026. The first one is actually good news: higher earning test limits. If you continue to earn money from a job while receiving Social Security benefits, your monthly payments could be temporarily reduced if you earn above a certain limit. This limit is called the Retirement Earning Test, and it typically changes every year to account for cost of living adjustments. There are 2 limits. One for people who are under their full retirement age for the entirety of 2026, and another for those who will reach their full retirement age during 2026. And here's something important. If you've already passed your full retirement age, the earning test does not apply to you. Your income will not affect your benefit amount at all. In 2026, both earning test limits are increasing, and that's actually great news because it means you can earn more in wages before facing any benefit reduction. If you will not reach your full retirement age in 2026, the 2025 limit was $23,400. The 2026 limit is $24,180. That's an increase of $1,080. The benefit reduction is $1 for every $2 you earn over the limit. If you will reach your full retirement age in 2026, the 2025 limit was $6160. The 2026 limit is $6560. This is huge for people who need to work part-time to make ends meet, but were scared they'd lose their benefits. You now have more breathing room. The second change is about the maximum benefit amount. The highest possible Social Security benefit is going up next year. In 2025, the maximum was $5,018 per month. In 2026, it's increasing to $5,251 per month. Now, I want to be clear, this is the maximum benefit. Most people are not receiving this amount. But if you worked for 35 years at maximum taxable earnings and you're claiming at age 70, this is what you could potentially receive. The third change affects people who are still working and paying into Social Security. In 2026, the maximum taxable earning limit is going up to a whopping $180,500 per year. That's up from $176,100 in 2025. What does this mean? It means that if you earn more than $18,500 in wages in 2026, you won't pay Social Security taxes on anything above that amount. But it also means that higher earners will pay more into the system, which helps fund benefits for everyone. Let me be specific about who needs to pay attention to all of this. If you're a senior living on Social Security retirement, this affects you. If you're a mom or dad on SSDI because of a disability, this affects you. If you're a veteran receiving VA benefits, this affects you. If you're caring for a disabled child and receiving SSI, this affects you. If you're a widow or widower hour receiving survivor benefits, this affects you. We're talking about roughly 70 million Americans whose financial lives are directly impacted by these changes. Look, I'm going to level with you. A 2.8% increase, which averages out to about $56 per month, is not going to change your life. If you're barely making it now, an extra $56 might cover one trip to the grocery store. It's not going to fix rent. It's not going to make healthcare affordable. It's not going to undo years of prices going up while your benefits stayed flat. But every dollar matters when you're on a fixed income, and knowing exactly what you're entitled to when it's coming and what you can do to maximize your benefits. That's how we survive and push forward together. So here's what you can do right now. 3 things. Number 1, check your benefit statement, log into your My Social Security account at ssa.gov, and verify your new payment amount for January. Make sure everything looks correct. Number 2, if you're working part-time and you are worried about the earning limit, you now have more room to earn without losing benefits. Calculate where you stand with these new 2026 limits. Number 3, look into additional assistance programs, SNAP benefits, Live for Energy Assistance, Medicaid, local food banks. These programs can stack with your Social Security. You're not taking advantage of anything. These programs exist for you. I know this stuff is exhausting. I know it feels like every time you turn around, there's another change, another form, another policy shift. But you're not alone in this. There are millions of us navigating this together. If this video helped you understand what's coming in January 2026, please hit that subscribe button. Drop a comment below. I read every single one, and I want to hear how these changes are affecting you. If you support changing to CPIE for a fairer COLA calculation, write "I support CPIE" in the comments right now. Share this video with anyone you know who receives benefits. Knowledge is power, and we all deserve to know what's happening with our money. I've got more videos covering everything from appealing denied claims to finding rental assistance. Check out the playlist in the description. Retirees info will always be with you in good times and difficult times. Thank you so much for watching. I'll see you in the next video very soon. Till then, please take care and have a nice